Welcome back to my daily report market videos with me, Richard, market analyst at Hantec on Tuesday, 11th of June. Looking at cable, which has actually had a little bit of a boost this morning. We've had some decent numbers out for the UK employment. Let me just show you where we had unemployment staying at 3.8%, but this is the key one. Average weekly earnings 3.1%, and on next bonus basis actually improving to 3.4%. So that's a real positive actually, and also the employment change better than expected as well. So this is pretty unambiguously positive data actually for the UK, and you've seen sterling ticking higher on the back of that in the last hour or so. Well, on the back of that in the last few minutes, but in back of that in the last hour, we've seen sterling rebounding, and it's a positive move that we've seen sterling now starting to move towards the high of the day, and it's testing that or eyeing a test of that 27.25 initial resistance, but 27.60 was the neckline high. Neckline high 27.55 to 27.60, and these highs of the last couple of weeks, which arguably, if you break out above those, that completes a small base pattern. You had yesterday's candle, which was a very disappointing move considering the recovery that had been building, and it started to drag back on the momentum indicators. But if the market can stay above 27 figure, then we could start to see this recovery potential building again. So this reaction to this unemployment data for the UK is a positive one, and encouraging for those cable bulls. But obviously there's a lot more that needs to happen, because sterling has not really got off the ground in a recovery scenario, certainly nothing anywhere near like the euro has, and sterling has still struggled to really gain traction in this recovery. But above 27 figure, you're still hanging on to the prospect of this could turn into a recovery, and then above 27.60 is the real sort of confirmation of that move. But just hovering around now, and can that reaction low at 26.50 again start to form into a potential higher low, is the question that traders will be asking. But certainly for now, this is a positive reaction to the UK employment data, but it needs to continue this recovery, because at the moment there is, or seeing as the reaction that we had from yesterday's move, the configuration on the hourly chart is not as positive as it was, and it really needs to get back on track with this employment data. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.